Greetings, Doom fans, and welcome to another edition of the Frostbite Falls Daily Rant, here on the Doomstead Diner. I've been busy with the new Weather Gone Wild series on Diner YouTube, which is very time-consuming now, because in addition to writing, recording, and editing audio, I'm also putting together slideshows as video accompaniment for YouTube. Each episode takes 2 to 3 solid days of work to put together. And then the Sunday Brunch Tech blog takes another couple of days usually. Then formatting cross-posted blogs to fill in for daily Diner Collapse meals takes a while too. And of course, I need to do my daily web surfing for Collapse news articles to put up on our Global Collapse, the Diner news channel on Reddit. Not much time left over these days to rant. However, Week 1 of 2016 has been a watershed week in the world of Collapse, so I would be remiss if I didn't rant on it. I have a couple of episodes of Weather Gone Wild in the can now, as well as part 3 of the interview with Vandweller, so I'm going to take a break from the climate problems to get back to the real proximal problem we are facing down, monetary system collapse. So far, we have only seen partial breakdowns in localized neighborhoods, Greece for instance, or Venezuela. The aggregate system remains propped up through gimmicks like quantitative easing and, of course, copious financial fraud everywhere. Those countries at the center of the financial fraud, the fascist states of America, Britain, and Germany, continue to do okay here for the time being. Most of the pain is being felt by nation-states with peripheral currencies, which includes just about the entire Third World, as well as medium-sized players like Brazil and Thailand, and even major players like China and Mother Russia. As we move into 2016, however, containment of the inevitable financial implosion of this system of credit is becoming ever more difficult for the central banks to manage. The biggest problems in this first week of 2016 have come from China, where their overvalued and overleveraged stock market went into tank mode, with the investors trying to escape from the carnage like rats from a sinking ship. China has been an accident waiting to happen for years here, as they pursued growth at all costs to the environment and to the population at large, too. Much like McMansion buyers here in the fascist states of America that were sold on the idea that real estate values could never drop, millions of individual Chinese investors were convinced their stock market could never drop in value either, and the central committee running China would always step in to backstop the markets. A no-lose game there for a while. Unfortunately for those individual investors, as the general Chinese economy tanks, all the funny money capital that dropped in on China over the last decade or two is running for the fire exit. Katie, bar the door! The big institutional investors are pulling their money out if they can, and dropping into perceived safe havens like USTs, Krautbunds, and of course gold also, although it is unclear there if there is enough real gold to meet the demand. So mostly they are just buying paper gold, which is kind of an oxymoron. Believe it or not, it's not even clear here that the FSFA or the Krauts can issue out enough new debt to meet the demand here, and the yield on the bonds they issue out continues to decline, in some cases to negative territory, in which case it costs the buyer of said bond some amount just to hold the damn debt. However, a slow bleed is preferable to losing your whole nut in an instant. So as long as the investors perceive that this is a safer place to park the money than stocks listed on the Shanghai Index, they will do so. Far as the dog shit on the Chinese market is concerned here, the People's Bank of China is doing everything they can possibly think of over a few bottles of rice wine to keep the clusterfuck under control. The first brilliant idea for keeping the rats from jumping ship was to drop on circuit breakers on the trading bourse, which of course is all electronic nowadays. Much as I love the 2010 flash crash call by Ben Liechtenstein in the pit of the S&P, here they come to sell them again. The days of flesh and blood traders waving money and stock certificates around in a trading pit on the New York Stock Exchange are pretty much history now. All the real action is occurring in nanoseconds across supercomputers, and the algos have not been kind to the Chinese market in the first week of 2016. The 5% take a breather, 15-minute circuit breaker didn't slow them down a bit, and they went right back to selling as soon as the switch was turned back on, zooming down to the 7%, let's call it a day, don our air filtration masks, and head home to play some Chinese checkers level on 2 of the first 4 days of trading. Finally, on day 5, on Friday, they decided this wasn't working too good and dumped the circuit breakers. In place of the breakers came the PBOC, ready to buy up all the dog shit everybody else was selling. This calmed everybody down some on Friday, and they managed to pull out of the tailspin with a 2% uptick, but still massively down for the week. What next week will bring here is anybody's guess. The same capital flight that is wreaking havoc on the Shanxi is also putting extreme pressure on the renminbi, forcing the Chinese to devalue it against the dollar. Trying to maintain the peg with the dollar is bleeding even their $3 trillion war chest of Forex a little too quick for comfort here. One witty headline this week was, "When $3 trillion just is not enough." You know things are getting rough when having $3 trillion in the bank won't cover your bills. The currency devaluation game versus the FSA dollar is killing just about everybody here. The Canadian loonie and Aussie dollar are getting hammered now, along with all the emerging market currencies. Canada, of course, is dependent on oil revenues. So, like all the OPEC countries, their economy is in the toilet as they shut down the tar sands operations in Calgary. And the business district in Alberta is a ghost town, with half the office space in town up for lease or sublease, as one energy extraction company or another lays off staff and shrinks down in the attempt to survive for the rebound in oil prices they hope is just around the next corner. Unfortunately, the next corner seems to be pretty far down the road, if it ever comes at all. Oz depends on China sucking up their materials, except the Chinese aren't buying these days. The FSA markets didn't escape the 2016 opening week carnage either. Standard & Poor's and the Dow had their worst kickoff week to the new year in at least a century, with even such well-beloved dog shit like Apple iShit and Netflix getting hammered. In theory, everybody else doing so bad should be good for the FSA, but it's all so interconnected it doesn't necessarily work that way. In this case, as the traders get margin calls in one bourse, they are forced to sell elsewhere to try and cover their bets. So far, it's not going too well there. Besides the equities circling the toilet, oil continues to crater and hit the $32 handle for a bit, with the basket price dropping below the $30 mark due to discounting to broke places like Europe. The relatively low price as far as the OPEC countries are concerned is wreaking complete havoc with all their budgets, from Venezuela right up to the Grand Poobah, Saudi Arabia. The Saudis have tapped the credit markets here, as well as cutting some of their subsidies for food and energy to the local population to close this budget gap. But the credit markets are not looking too kindly on them either. Their risk of default surpassed even that of Portugal, which is remarkable in itself. Like the Chinese, despite the fact the Saudi princes have a huge war chest of savings after the years of high oil prices, they also have very high expenses. Those skyscrapers in Riyadh don't come cheap, nor do the water desalinization plants. And maintenance on all that shit is a bitch. Not to mention, you gotta employ a whole lot of military grunts to stay in power, and buy all those bombs and jets that carry them to drop on Yemenis. Paying all those bills on $30 a barrel oil is tough. Along with the economic catastrophe for 2016 opening week, the refugee crisis in Euro trashland took its latest turn for the worse, with the apparent rampage across a few countries, including Finland, Sweden, and Austria, but most notably, Krautland, where during the New Year's Eve celebrations, what the media quotes as thousands of drunken towelheads went on a rampage, groping, fondling, robbing, and in one alleged case, raping one of the locals in Cologne. There are no numbers or specifications on precisely what the crimes were committed by these drunken towelheads, but after a couple of days with the lid on this, it made it into the MSM, and the right-wing and neo-Nazi xenophobic parties immediately jumped on it, now forcing Frau Merkel into backpedaling on her Willkommen cheap workers policy and now threatening deportation of repeat offenders. Except they don't know for sure who the original offenders were, so figuring out who is repeating the groping crime on New Year's Eve may have to wait until January 1st, 2017. It is doubtful, though, that this will stew that long before blowing up, considering the fact that more than 3,000 refugees a day are still streaming into the fatherland, and you get 3,000 new neo-Nazis a day shaving their heads, piercing their noses, and slapping swastikas on their clothes and on their BMWs. Precisely how Europe is going to secure borders against a population of millions of people trying to migrate out of unlivable neighborhoods remains an open question. What is not open to question is that the situation will become increasingly more violent through 2016. As Doom Weeks go, kickoff week for 2016 was a pretty eventful one, although by no means do I think we have reached peak mayhem yet. I am quite sure 2016 will have more collapse stories I can write and rant on than I have hours in the day to do it. So I'll be back here soon with another one. You can count on that until the internet goes dark or I buy my own ticket to the great beyond. And that's all the doom. This time until next time, here on the Doomstead Diner. Later, Doomers.